Welcome to today's weekly technical analysis session. My name is Joel Chandran, lecturer and research analyst here at Train to Invest. We're going to take a quick look at the market, the Canadian stock market, how it performed over the week, look over our Focus 5 stocks here at Train to Invest, gold, silver, and a few ETFs. Here is the 3-year weekly chart. As you can see, I have drawn resistance and support lines between 12 and 13,000. And over the last year or so, it looks to be very range bound. Could even put here at 11.5. Comes all the way down, back up, all the way down, back up. And a good sign is that we're seeing higher highs. Now, here on the right-hand side, the MACD and the MACD histogram on the longer-term chart is what we're going to look for in terms of strength, in terms of what's more important of the three indicators. In the longer-term charts, the MACD and the MACD histogram are more important. Good news, even though I've circled it red, the MACD looks to be turning higher and is about to cross. And the histogram bars are showing a shrinking week by week bar, which is a good sign, showing that there is strength coming into the stock and the index. This is what we want to see. It could mean that we could push through 13 into maybe even 13.5, but let's not jump to conclusions right away. But looks like it's strong strength coming, and that's always a good sign. Momentum on the RSI and the stochastic. RSI is showing a blue, and that's just showing the momentum is there on the 14 days, but not quite as strong as the stochastic would show, as it's green and trending higher towards the upper end of the range. And that's probably why the RSI has tailed off a little bit, even though the stochastic is pushing at that upper end. Now here is the 6-month daily. As you can see, I drew a red line here up until Wednesday. Up until a couple weeks ago. Yeah, Wednesday. Great strength. You got 1, 2, 3, 4, 5 days of strong growth. Pushed through 12.8, couldn't hold it, pulled back down. What's important to note is that it didn't breach the 12.6 mark. Hit support, bounced back. A positive sign. Indicated by the MACD histogram, even though there has been convergence on the positive side, we're still seeing strength with the index. Momentum, on the other hand, is beginning to wane, and we see a sharp decline here on the stochastic. Could indicate that it's going to fall through, but I would expect it to continue to turn higher as long as the conditions don't change between now and Monday morning. Here is the 6-month daily West Texas Intermediate chart. As you can see, oil has been quite range bound, moving up and down, so it's disappointing to see it close lower than it opened, but again, oil prices are moving in the general up direction. It did try and we kind of have a double top here at the $97 mark. So either it's going to break through again or fall down steeply. And we have to wait and see on how that goes through. Enbridge, 3-year weekly chart. 2 strong uptrends here, followed by a brief downtrend of about 2 weeks before it decided to turn back up. So again, a good sign there. As you can notice, there is no resistance because it's putting in new 52-week highs, which is a great sign. Here on the MACD and the MACD histogram, the bars are very, very tiny, but they're beginning to grow, showing that there is divergence on the positive side, as you can see by the MACD touching the signal line and beginning to spread. Momentum on the RSI is moving higher. As you expect with a very steep uptrend, it's reaching the 80 mark, and that technically is high, but with such a steep uptrend and prolonged uptrend, we're okay with that. The momentum on the stochastic showing the movement in Enbridge over the last couple of days. I would expect that to turn higher throughout next week. Here is the 6-month daily. We had Wednesday and Tuesday were the two high days. It tried to make a new high, couldn't quite do it, so investors pulled back. It dropped below 48, but closed higher each day, which is great, showing that it was just a simple sell-off. MACD histogram and MACD are both showing positive signs. The divergence is beginning to grow again on the positive side, so that's good news. RSI showing growth here at 60. With the pullback on Thursday, Friday, you can see the momentum is back with the stock. And what's more important is that we see momentum here at a crossroads looking like it's going to cross higher. So that should bode well. If you got it under the $48 mark, you should be able to make the 1% quite easily. IMO, very, very range bound on the 3-year weekly, showing growth here over the last couple of weeks after it based for a bit. It broke above 40, which is good. MACD histogram showing a different picture here. But what we need to take away from that is, even though the bars are small, they're shrinking towards the zero line, and it looks like the MACD is going to eventually cross higher as long as oil prices continue to stay high. RSI showing flat momentum. It is growing. We're in the bottom of the range, which is a good sign, showing that there's room for the stock to grow for the next couple of weeks. And the stochastic showing increased momentum as the 14-day line has crossed above the 3-day line. Here's a 6-month daily. This showing a little bit of a different picture, as we saw a decline from Wednesday, Thursday, Friday was a bit tougher, but it closed above 40, which is a good sign. MACD histogram looks to be crossing almost above the zero line, which is another positive sign for the stock. Momentum has pulled away somewhat in both the RSI and stochastic, but I would expect that to turn higher if the oil prices continue to rise. Suncor, again, 3-year weekly chart, 1, 2, 3, 4, 5, 6. The last 6 weeks, we've seen a strong uptrend. Unfortunately, it closed down on the weekly this week, so that's not a good sign in terms of the uptrend. But we do have a cross here on the MACD, and the histogram actually put in a positive bar. Momentum here is beginning to wane. I didn't give it a red bar, even though it's declining, or red circle, even though it's declining, because I think with oil prices, again, it'll begin to turn up. And again, here we're at an inflection point. It is at the very upper end of the range, so it's bound to come down a bit. But especially with the stock closing lower, it could come down $1 or so before turning up higher. Taking a closer look at the daily chart paints a more negative picture. You've seen about 2.5, 3 weeks worth of strong uptrends here from the 28 to 33. But on the MACD, you've seen a declining histogram, and we're at another inflection point where it crosses under. Now, if it crosses under, we know that it's going to be a sell signal. Momentum seems to be leaving the stock here. The stochastic has fallen sharply, which is not a good sign for the stock itself. Now, it closed around the $32 mark. I could see him falling back down to 31 over the next couple of weeks before pushing back up towards 33. As you can notice, at 31 there is a lot of memories, and that's really a good sign because it means investors remember 31 is a good point. They'll probably get in just under 31 to take the rise. So Suncor indicators are saying if you're looking to buy, wait a little bit. If you're holding it still, you need to make a decision. Royal Bank on the 3-year weekly chart. Some good signs here. We've had a lot of weeks between the 60 and 62.50. It broke through the 62.50, but couldn't break through the 65. We had 1, 2, almost 3 weeks. It tried to, but couldn't. What's good to note is the MACD beginning to turn up, which is a great sign, especially since it's on the positive side. And we have the histogram showing small and smaller bars. So that's a good sign. Momentum-wise, things are looking good on the long-term chart. Let's take a look at the daily. Momentum here crossed. I would have put it green, but this is kind of flat, but it's turning up. So there's strong momentum, good MACD and histogram indications. I'm a little wary because it's close to its resistance point at 64, but again, the momentum seems with the stock, so it could pop through and it could get up to almost the $65 mark. The thing with the banks is that they're worried about the mortgage issues. You'll see that with TD, but we'll have to wait and see for the earnings reports. I'm sure the earnings are going to be great. We'll see the team what the forecast is, their own forecast for the next couple of quarters. So TD, again, one of the second largest bank here in Canada. Since July, maybe August, it's been pushing up higher, which is a good sign. The MACD histogram and the MACD line itself showing an inflection point here. So if it crosses over, that's a major buy signal. Momentum is with the stock, but not really in a sharp uptrend. But the stochastic is showing stronger signs of momentum for the stock. The 6-month daily has a tough time breaking through 85. Hasn't broken through 85 since April. So it's obviously going to close a little lower. Momentum seems to be pulling away with the stocks, as you can see with the 2 red circles here. And the divergence is shrinking on the MACD. Could see it pulling down back to low towards this 82 mark before turning back higher, maybe even 81, but it all depends on the earnings reports coming up soon. Here is the 6-month daily chart of gold. As you can see, it's taken almost 21% decline in the last 6 months. It's beginning to pull back. It tried to break through this 1400 mark, couldn't do it. It began to turn down. Now this is going to have a major impact both on currencies. The US dollar is most likely going to move higher in comparison to gold, as well as gold ETFs. Here is the CGL, the iShares Gold Bullion Fund, follows gold. As you can tell, rough time, can't break through this 1250 mark. MACD is no good. Momentum is definitely out of the stock. And this won't turn around until gold does. It's a pure play on gold, so it follows the price of gold as well. As you can see, tried to go higher, fell down, just like we saw in the last couple of days of the chart. Now this is HGD, and this is a gold bear plus ETF. So what happens is, if gold goes up, it falls by 2 times. So if gold has shrunk, let's say 10 points, it is going to go up 20 points. Again, momentum is beginning to grow here, and obviously with gold continuing to fall, you can expect this to go higher and higher. So if you want to make an investment decision, you can continue to base this on what's going on with gold. If you feel gold is going to fall, this may be where you want to jump in. So remember, a bear plus ETF, a little more volatile, but it has more movement. And as you can see, momentum is beginning to turn here. And it has broken through the $22 mark and potentially a chance to break through this 24. This is the silver chart. Same ugly trend as gold. For the last 6 months, it has fallen almost 35% as both commodities continue to get hammered. This is the HUZ, sorry. It follows the silver price as well. Momentum, not quite there. We have a cross to the negative side on the stochastic, and we have a flat here just above the 20 on the RSI. Not great signs at all. We do have a positive MACD, but looking at the chart, it's going to have a tough time breaking through the $15 mark, especially as silver continues to fall. Silver bull plus, so this is when silver moves up 10 cents, we'll say, or 10 points. The ETF is going to move up 20. Okay, if it drops 10, it's going to fall 20. As you can see, same kind of issues here. We've had a lack of momentum and silver prices continue to fall. The MACD here is green, but I expect it to turn down, especially with it continuing 1, 2, 3, 4, 5, 6, 7 days of just bouncing around at this $10 mark. Again, it won't move higher until silver prices have bottomed out and begun to turn higher. So this is my contact information. If you have any questions, concerns, issues, let me know. I'd love to hear from you. There's our website. Check us out at www.traintoinvest.com. And our blog posts at www.traintoinvest.com/blog cover a wide array of topics. We have this weekly TA session there, as well as other points and of interest and articles that we put together about once a week, sometimes twice. So you can subscribe to the blog there. So that is it for us here today, and I look forward to your comments. Bye now.